Welcome to Financial Fitness with Patrick, presented by Soaring Prophets Media. It's July 11th, and I don't know, is the top in, folks? We saw a very interesting day today. We see Tesla down 8.5 on the day. Just take a second, take that in. Tesla down 8.5, but that's not the only one. We have all the Mag 7 down. It's been sort of an interesting day. Is this going to be the precursor to what's coming? NVIDIA down 5.5, Microsoft 2.5. Google almost 3, Apple 2 3/4, Amazon 2.5, Meta 4.2%. After hours is going right now as we're filming this. It's still a bit of a bloodbath. And, you know, we've been talking about this for a long time on Financial Fitness. Again, on some of the other shows that we have here talking about personal wealth generation and finance. Is the top in? Is the AI bubble about to pop? What does this look like? We had Jerome Powell. We had Janet Yellen before the House and the Senate in the United States for the last 2 days, going in and spinning, I don't know, the best economy in the world. That's what I keep hearing for the last couple of days. The strongest, the most resilient, while prices continue to inflate. We have real estate in a very precarious situation right now. All of the lawmakers keep saying to them, like, guys, what is happening here? You folks, you've got to really get this under control. We have to figure out what's going on. Yet the messaging still to the market is that we continue higher until we don't. And we find ourselves again in this very precarious situation. We are sort of at this brink. When we look at historically, when bubbles pop, it's right at all-time highs. We had all-time highs on the NASDAQ, S&P. We have It's been all-time highs. What do you have to complain about? Well, unemployment ratcheting up, consumer debt load problems, foreclosures, delinquencies on credit cards. We have a market that is really, truly being traded algorithmically at this point. The fundamentals underneath it, and you profiteers out there, you know this. We've been talking about this for a while. You have to be looking at this market with very different lenses than you have for a number of years. We have indicators, you know, and we're going to get into a really good conversation here shortly, but we have these indicators that are still saying higher until not. The problem is when you see moves, like, again, I look at Tesla today, 8.5 down. And what's that off of? Well, they're putting the robo-taxi event that was going to be August. It's been now pushed to October. But is that are we talking about let's call it 10%. The blood's going to be in the street tomorrow as well. Let's call it a 10% drawdown on Tesla, right? What is happening here? NVIDIA, same thing, 5.6% at the close. Again, after hours is not looking good either. These are multi-trillion-dollar companies. Those companies, that Mag 7 that I just listed off, is $12 trillion in market cap. 12 with a T trillion dollars in market cap, where you're seeing these huge pullbacks today. And those names have been astronomical since October of last year, right? We've talked about this before. In the history, when the books are written and it's all closed up, have we been in a recession since September? Have we been in a recession since October of last year? We have these Mag 7. We have no other breadth in the market. You folks hear me talk about breadth of the market a lot on this show. If you take these $12 trillion of your money, this is what I find is crazy for people. It's your cash. It's your pension. It's the teacher's pension. It's the police pension. It's every pension. They're filing into these asset classes, these Mag 7s, because you couldn't not. If you are planning people's money, if you are working within those confines, people are asking you, how much NVIDIA do I have? How much Tesla do I have? How much? But the technicals haven't been there. And that's where my guest today, we're going to take a look at a few things. She is a fantastic individual who primarily deals with the Forex exchanges. So that's foreign exchange markets. That's the dollar, the Canadian dollar here in Canada. That's the US, how it trades against it. That's the yen. That's the euro. That's all of these exchanges that are currently happening around the world every single day. We have ebbs and flows in markets. Well, we've talked a lot about bond yields, haven't we? We've talked about the Bank of Japan, the central bank in Japan, and what they've had to do over the last little while, which is, well, it's going to be problematic for the United States. But I am super happy today, we have, again, this fantastic guest. We have Oreva Omotosho, who is joining us, another Canadian, a fantastic Canadian. We don't get Canadians all that often on the show. So 2 in 2 weeks. Oreva, it's a pleasure to have you.
Hi, Patrick. Thanks for having me. I love the opportunity.
Well, that's great. Well, we're glad to have you. Oreva, tell me a little bit about yourself. How did you, first of all, start trading? And then now you've kind of started this organization and you're helping others learn the game, because there's a huge learning curve to this. Tell us a little bit about that.
Yeah, absolutely. So my name is Oreva. I'm here in Canada, Greater Toronto area. So I started trading in 2020. So at the time, I was a college student and I was about to graduate university. I didn't really have much to look at in terms of like what I wanted to do in the future and things like that. And COVID just made me realize that I needed to look beyond just a regular job. A regular job would not cut it because, those jobs are owned by businesses that are trying to survive. So if push comes to shove, they're going to shove you away. Right. So I have to take care of myself and think of my future. So I found trading. And initially I was thinking of starting up a business, maybe drop shipping or something. But in terms of, inventory, customer, looking for customers and things like that, that could not fit into my life at the time. So when I found trading, I literally fell in love. It was like love at first sight. And I've been doing it ever since, yeah.
I love that. And it's funny you say that, Oreva, is that there's been so many people, the retail, well, I think a lot of people made a lot of money very quickly and very easily in the GameStop movement, right? Mm-hmm. You had these people that were like, hey, stick it to the man. There's a huge opportunity here. And as long as you clicked sell at the appropriate time, a lot of people did very well. I know myself included, I did quite well on those trades. And it was this whole, I'm going to call it rebirth of retail. And we look back historically and we saw during the dot-com bubble in the early 2000s, we had this innovation of retail traders. People were able to get on the internet. Like, that's how silly this sounds now looking back, but they were able to get on the internet and make money via trading. And there were pros and cons to that. Back then, we had so much money funneling into the markets that it sort of created this froth and this bubble that we sort of have again now. There's sort of a weird consistency that we've seen with that. But Oreva, you've started this business. You're showing people, helping people, learning how to trade. But what are you trading? Like, what does that look like on a daily basis? Because you're a day trader now. This is what you're doing for your job.
Yeah. So I'm focused on the foreign exchange market. So I specifically focus on the US market and the yen. Yep. And then I also trade gold. And then I also trade some indexes like NASDAQ 100, S&P 500, and US 30. So that's my focus.
Well, and those, again, folks, as you know, the market's moving up and down every day. And, we're going to get into some of the actual technicals here with Oreva as we go through this. But when we look at some of the macro issues, we can sort of hedge our estimation of what's happening, right? Like, we have a consumer in the United States that is weakening. The United States is a massive consumer base, right? They depend solely on being a consumer. So if you're going to buy Nike, right? If you're going to put all your eggs in the Nike and be like, I love their shoes. Those shoes at Nike are the best shoes going. I'm going to invest in Nike. Nike has a bad earnings, which they did. And you could be down 25, 35, 45, 55% real quick. Yeah. Where Oreva, maybe you could talk a little bit about more what those markets that you're trading looks like. You're not getting massive fluctuations, but you're scalping. Maybe talk a little bit about that.
Yeah. So, with Forex, we have like 3 main trading styles. So we have the scalping, intraday, and swing, right? So what I personally do is somewhere between intraday and swing. So when I spot an opportunity, I'm usually like on the higher time frames. I personally do not, I don't like to focus on scalping, just because I got into trading so I can spend more time, so I can have time freedom, right? Sure. So scalping basically, it's in opposition to that freedom, in my opinion.
Right.
So what I do is I find an opportunity, and then I set my trading view alerts, and I just wait for price to come to me. I keep my trading super simple. My charts are clean, just straight to the point stuff.
I love that, because we're going to pull up your charts here in a second, but that was something that we talked about off screen, because I said, hey, listen, let's dive into some of the charts. I'd love to hear some of your thesis about what's happening and that. And I'm like, I could pull mine up, but they literally are chicken scratch. Like, they're awful. They are ADHD on a screen. It's wild.
No.
And I asked her, I'm like, hey, what is, like, can we use your screen? And she's like, oh yeah, mine hardly have anything on it. Like, I read it and react from there. So
Yeah.
Men versus women on that one. Women
I
check
know.
mark is what it is. That's great. Well, James, why don't you pull up Eva's screen here and tell me what you're seeing here. So this is gold. This is the current spot price of gold where we are right now. And you do have a few lines. You've got a little bit of work done on there, but let's walk me through what you're seeing.
Yes. So usually what I do is I usually trade off of the daily and the 4-hour time frame.
Okay.
In terms of my trading method, I focus on support and resistance, supply and demand, right? And I try my best to follow the trend that is happening currently, which is this right here. Yeah. So I focus on what is happening right now while putting into account other zones that the market has touched. That's why I have this red line over here, and I have this zone over here, right? So between last week and this week, I've been able to find great opportunities on gold. I started off down here when we're in this dirty range situation over
consolidation here. Type ranges.
Yeah. So I was able to get in somewhere down here on my move, and I got up here, right? So my trading is pretty straight to the point. I aim for a reasonable reward. I don't like to, overhype my reward. So that way I'm able to walk away with decent money on, even a weekly basis, on a monthly basis, right? And in addition to that, I was able to capitalize off of this particular move that went down between Monday and now. I got in somewhere here and I held the trade up to here.
Perfect.
Right? So with my trading method, I'm able to just find good, quick opportunities in the markets and maybe hold for a couple hours or even maybe just a few days, and I'm able to take decent profit home.
Right. Yeah. Well, again, for myself, I'm a little bit longer term trading, as far as like I would take a much more macro approach to this. I'm dealing more in the days, weeks, months kind of thing. So I look at this, and if you could just scroll down slightly or pull the chart up a little bit, I want to talk about the double bottom that we see here that's formed, right? So when we look at around the 10th, we see that we've had a massive price pullback after a high. Okay. So I would also argue that there's probably a bit of a head and shoulder that was created around the May 13th range. So we have a double head, we have a shoulder, we have a head, and then we have another shoulder. We have that big drawdown. But then you can also see another support in around the 25th, 26th of June. So to me, you're seeing these indicators all come into line, that the massive rundown has been bought up, right? It didn't just sit there. We weren't consolidating in a bear flag. We were sitting there in a consolidation pattern. That's garnering support. It's telling buyers that we're not running here. This is not going to be another flush, because that's a powerful flush that we see on about, what's that, the 9th, 8th, 9th of June. That's a powerful movement, right? Yeah. This is gold. This is a commodity, right? But it goes in the face of general markets. So as there's weakness, as there's tumultuousness that's going on, gold tends to get stronger. It's a hedge, right? So all you profiteers out there, I know Eve knows this, but this is sort of the idea, is that as we've had going into, the end of, whatever is going to happen in the States politically, a lot of people use gold as a hedge. We see Bitcoin and those sorts of things that's had this weird drawdown. I thought it was the digital gold. There, we'll leave that one for today. But so again, strong double bottom we have in around the what do we got? Say the 9th, 10th is the first leg. Then the second leg is probably around the 26th, 5th, something like that. And then we have this again, this nice movement up. into that
Yeah.
first, what I would call a bull flag. We see that bull flag consolidation, powerful jump up movement, and then again, minor bull flag consolidation, again, another ratchet up. So what are you seeing now that we are above your sort of pockets? We end up in this sort of free zone. What are you seeing now? We're like, if you're putting out the next 4 days, 5 days of trading, what are you looking at price action?
Yeah, so honestly, I'm just looking for price to continue to the upside. So I'm going to wait for a pullback. So I'm going to expect price to come down to the place it broke out from. Yep. And give me a continuation. So that's what I'm looking at in terms of technicals. Yep. But I'm just going to be waiting for price to come into this area that I have marked out here. So that's why I have my alert set at this point. So when price comes to this area, I'm going to watch what the candles are going to look like before I actually execute. So that's what I'm looking for.
So what would an entry look like for you in that position? Again, you've got your alert set. Do you have a bit of a rule of thumb when entering a trade, or are your alerts basically the, okay, I need to be taking action at this point because it's hit my parameter?
Yeah, no, I don't do that. I actually wait for some candle formation. So at this point, because right now we are on the 4-hour time frame, so I will drop down to the 1-hour time frame when price actually comes here, and I'm going to watch to see some form of pin bar candle form, some nice bullish engulfing, so, you know, something to tell me that, okay, buyers are now in the markets.
And again, right now, gold being a hedge is going to be very interesting over the next few weeks, especially with everything that's been kind of going on with Biden of late. I don't think I'm wrong in saying that. There's been a lot of concern in what's happening in the market, and you can sort of see that rally from the double bottom. I've said this before. You can go out of your way and you can try to prognosticate into what each individual stock is going to do. The charts don't lie. There is very few times where the charts are just like wildly all over the map. They usually have some sort of pattern, and you can historically go through. Eva, why don't we look at, a couple other things that you've been monitoring of late, and we'll kind of break them down a little bit as well.
Yeah, sure. So over here, I have my watch list. I have a few currency pairs here. Then I have my gold, and I have my indexes up here. So specifically right now, I have the AUD open, AUD versus the US dollar. We had a very messy range. Although it was messy, I was also able to take advantage of a couple of moves during the range over here. But look, going forward, I'm again just looking for continuation moves, right? Right now, price has broken out of this little tight range over here. So we could see something like this happen on a technical standpoint. However, if price breaks through this zone, then up here would be my next area of interest, because we saw some strong resistance. So it could be used as a strong support as well to continue to the upside.
And you folks out there, you're seeing these, right? As she's showing that chart, you can see the supply and the resistance levels. And that is the trading strategy that she's implementing. You can see here. Historically, you can look back at the candles that she has in play there, and she's created that zone. That zone is super important because there is nothing on the most recent run-up. There is nothing in regards to support there. It has been a parabolic move. It's been rapid. It's been a slice. So you have to look back at a historical level for support. Otherwise, you're trading completely blind. And what rockets up like that can rocket back down the next day. Exactly. And that's where these trading techniques are so important. Sorry for interrupting, Eva.
No worries at all. So my trading process is quite simple, straight to the point. Same thing on Euro USD. I also have, a level of resistance. Resistance could potentially turn into support again. So if price comes to me, which is this zone here, then I would receive the alert and come to my desk and find the opportunity. So it's literally the same thing for every single pair listed on here. GBPUSD, and then I have the yen, pairs here. So I have a GBPJPY, which I am now watching closely. We had a crazy drop today at the time I woke up from sleep. Um, and I'm currently watching this zone. Price could potentially just continue to the upside from where it's at right now. So I'm going to be watching to see what happens here in this zone.
Right.
Yeah.
So to me, if I'm trading that off, I see this nice movement up, but you're not seeing much in the way of, you know, support and resistance on its way. It's been a very tight channel moving forward. So I don't have any pattern where I can pull out of that in regards to other trading technicals, right? That one to me is a very tricky one because we have to find out a new consolidation system. Is this going to end up being a consolidation for a tight period of time, or do we continue the periodic trend that we've had here? So let's go back to macro, right? We have Japan that is trying to get inflationary, which is very odd. They have been deflationary for the last 25, almost 27 years, massively deflationary. If you were a business in Japan for the last number of years, you bought a home in Japan, the value of your property has not increased hardly anything over the last 25 years, right? That's the easiest way I can explain this to you. So what we're seeing now is the Bank of Japan is in a situation where they are pulling out of purchasing short, mid, and long-term American bonds in order to stimulate their yen. They have to get back to stimulating their currency. And the reason is that they cannot continue to be deflationary the way they have. They have put federal policies in place to do this. And what happens is every once in a while, you get these massive, again, this is the Great Britain pound versus the Japanese yen, okay? So every once in a while, you get these big snaps. And that's when they would be directly in correlation to federal policy that you're seeing in Japan. So that's where the macro meets the micro. This is the technicals of the chart. We see this big drawdown in the recent days here. It's because of concern of what Japan is going to do. Japan has the entire world at their fingertips right now in regards to bond markets. Japan buys a crap ton of the Western world's bonds and their debt. And that's where we're seeing these really lively moves in Forex and exchanges. I love that you do this. This is super cool.
Yeah.
So what else do we have here? So let's take a look at the US dollar just as a generic one. Do we have the USD there?
Yeah, USDJPY.
Yeah.
Or do you want to see another one? Or?
Well, that's perfectly fine there. And this is my entire point. So this here is the US dollar versus. We're going to go through a real problem here with the US dollar, and it's going to create inflation, right? As the US dollar removes buying power in the market, you need more US dollars to buy foreign currency, right? And as we see this is the upward trend that we've had. This now is going to move. My big concern about inflation moving forward, and it's, you know, we had CPI today, which came in a little bit cooler than, well, I don't think it was unexpected, but it was cooler than year over year. The issue is that we have all of these commodity prices that are still not in ranges, right? Like do you trade copper, for instance? Do you trade aluminum?
No, I don't.
So like aluminum, for instance, is still like way past COVID highs, right? Like it's the COVID averages, pardon me. It's way past that. So we're trying to figure out what that looks like. I thought we were sort of, you know, lowering our manufacturing standards over the last little while. We're not manufacturing as much as we have been. So how are these commodity prices? China's been sort of on the bench. All of these things, they all are able to be followed by the charts. And I love that you're doing this. We want to make this a big phase of the show going forward because, like we said, the charts never lie. So that's USD yen. So what are you seeing there? You obviously you've got almost a triple bottom support at the top. Then we broke through that zone of support, and that's fallen right down to your previous zone of resistance.
Yeah. So in terms of technicals, there is a strong possibility for price to continue to the upside. Yep. However, because I was expecting for price to actually come down, I had this zone marked up way before like this drop happened. So we could see price come back to test again and then continue the move to the upside. If that happens, I will be looking for an opportunity. But where price is at right now, I wouldn't really want to enter just because the risk to reward isn't going to look good. Right. But yeah, I would continue to buy this pair, honestly. Yeah.
Yeah, that's interesting. Okay, and then you've been trading the S&P, NASDAQ 100. Why don't we pull those up and take a look at some overarching views there?
Yes.
So again, S&P 500, folks, top 500 companies that are making up, generic U.S. markets. Very tech heavy right now. When you look at the 12 trillion in the Magnificent Seven, and that's where we are today. Welcome to it. Crazy.
Right? Yeah, so from a technical standpoint, we actually have a demand zone over here, right? Because we had some indecision over here, some sideways movement, and then we have this a massive push to the upside. So now price has dropped and is literally chilling at that level of demand. You see how the bearish candle did not just continue to the downside. That is an indication that we could see price continue to rally from this point. Right. That's just one indication. However, we do have PPI tomorrow, which can certainly affect that. But that's what I'm seeing right now on the S&P.
Absolutely. Yeah. So I wouldn't be surprised tomorrow if we see a warmer, I'm not going to say hot PPI. We had that last month where we had a cool CPI and we had a hot PPI. That puts us in this weird kind of stagflation potential environment. The issue is, and I know I said follow the charts, right? But the charts are great. You have to know when to get out though too. And I've said for the last week or so here that I think that the top predominantly is in on AI. And it's going to be short term. I just think that the AI is going to burn you before it makes you a millionaire again, right? I think the run's there. I think it's going to burn you before you get the next 200% growth trajectory. And that's my concern. Like I said in my preamble here is that your pensions are in this. Your assets are very tied to this right now. The S&P, that is not a tech sector. We're going to go to NASDAQ in a second. But the S&P is so heavily entrenched in that Mag 7 now just because of the weighting of a $3 trillion entity brings. And that's my concern, is that as the Mag 7 roll over, which, guys, we talked about this earlier today, Tesla down 8.5, NVIDIA 5.5, Microsoft 2.5, Google 3, Apple 2.33, Amazon 2.33, Meta 4.11. As those roll over, you have to know your exit. You don't make no money. There's no money to be made unless you hit sell. And that's where we have to look right now, is that how did we do? Did we make a ton over the last 8-month run? Where are we? Maybe take some off the table, make half off the table, go take the kids to Disney World. This right now is a situation where this gets scary because your upside, if you are longer term, your upside is not there anymore. It's not 200 or 300% like it was 8 months ago. Now is the time to start hedging, taking money off the table. Eva, sorry about that. I go on tangents.
That's okay.
So why don't we take a look at the NASDAQ? We'll jump into that as well.
Yeah.
And then you can sort of see what we're looking at. Again, to me, long term, if we look back on this, is this going to end up being a head and shoulders pattern? Right now, we're seeing this ascending wedge that when it breaks through support, there's a very real chance that we could see a very large pullback in the NASDAQ. Again, you folks out there realize the NASDAQ is your tech sector, right? So this is the S&P on steroids in the tech sector. So as tech rolls over, we just did the numbers, $12 trillion. If we see 15, 20, 25, 30% come off the table, that is a massive amount of liquidity that's going to be pulled out of the market very quickly. And that's the worries that I have. So tell me what you're seeing.
All right. So let me see what the daily close like. Okay. So the daily time frame, I guess we had a very bearish day today. But again, like we just saw on the S&P, price just stopped at this level of demand. So the question is, what's going to happen when after PPI tomorrow? I think that's the main question. Personally, I would not be placing any trades until after PPI tomorrow, just in case, there can be some volatility and stuff. But yeah, we could see price continue to the upside from a technical standpoint. However, if price actually breaks through this zone, we could see something like this,
Yeah.
right, to the downside.
Test and then continue failing. And again, that's the traditional, bear flag pattern. You're going to get some consolidation before another leg down.
Yeah.
And then I say that is opening us up for the head and shoulders on the NASDAQ. Well, that's a huge fail. If we fail in that zone of support and we end up in that 19 and change range, again, this is the NASDAQ cash, the 19,000. If we break through that, say 19.5, you're going to have another leg down. And traditionally that is the head. So that's the shoulder width length of the head dropping. So we're going to go from 19.5. We are currently at 20,700. We have a fair, we've got 1,000 plus points to drop on that. That is not an insignificant, and that's a short time frame. And that would be a completely healthy market pullback and correction in that phase. The big issue is that what are the other things that are going wrong in the world? We talked about real estate. We've talked about a lot of the other indicators that are coming out. Visa did not have a good earnings. We're coming into earnings season. We have all of these questions. I'm just concerned that if you've made 150, 200% on your NVIDIA or holdings this year, your Meta, your Tesla's had a really crappy year, but all these other Mag 7, it's time to take money off the table. There's no other way. This is not trading advice, but don't be an idiot. Take the money off the table right now and sit back and go to cash and wait for these opportunities to come out. But Eva, I could do this with you all night. I love this stuff. I love that there's fellow Canadians. I thought I was the only guy. I thought I was the only one. There's so few of us out there. But Eva, James, if you can pull down those charts, we can just go back to the normal cameras there. Eva, why don't you tell us a little bit about who you are with Chart Nation, what it is you folks are doing and how you're helping people, and then how can people get in touch with you?
Yeah, for sure. So I'm the founder of Chart Nation, and it was basically built off of the struggles I went through to actually find a method of trading that works for me. When I started trading, I found a lot of noise, like on YouTube, so many courses, and I was just all over the place. And then finally, I was able to put together a system that has now replaced my regular income and beyond, right? And with that vision, I created a system, like the entire trading process, to be replicable. So another person can literally do exactly what I'm doing and create an income out of it. So that's the thing behind Chart Nation. And in addition to that, the method of trading is also super simple, right? That's the other thing that people struggle with, is they think trading is so too technical, but it's really as simple as 1, 2, 3. So that's what I'm doing. I actually just got off a meeting with my students before I hopped on this meeting with you. So I'm doing it back to back because there's been a lot of layoffs. There's the inflation, the interest rates, like it's not favorable to the regular person. So we need to find a way around it, right? And this is an avenue that people can take advantage of, but they just don't know how. So we are bridging the gap over here. So you can find me on Instagram, ChartNationFX, and also on YouTube, ChartNationFX, also on TikTok as well. That's how you can get in touch with me.
Eva, I love it. I think your thesis about why you've done it and what you're doing is spot on. I've got a 14, just turned 15. I'm lying now. Just turned 15 year old daughter. And I am a huge advocate for young female entrepreneurs. I think there is nothing greater. And we have to support people like yourself who then allow my daughter an opportunity to grow from there. When I first started talking with her about charts when she was about 9 or 10, it was like, oh, Dad, that's stupid. And now she owns stock. She's sort of got a wherewithal about what the world's doing. And when you wake up in the morning and you watch, the news and you listen to CNN or MSNBC or Fox and you go, that's bullshit. The chart says this. Like, I love that.
Yeah, honestly.
I love that. No. If that was the case, gold would be doing this. Like, I think that is so powerful. And I say this, young female entrepreneurs, I love the whole community. There is such a need for it. And if you can teach people how to put an extra $100 a day,
Right.
$10,000 a year changes people's lives in a huge way. So
Mhm.
I love what you're doing. We will definitely be looking to do some work with you again in the future. We're local now, right? Like we're just down the highway.
Right.
This is great. 2 Canadians in 2 weeks. What do we
Yeah, that's
do?
awesome.
Yeah, it's fantastic. So everybody, as always, Profiteers, we got a couple other shows coming up. We have Jennifer Burnham Grubbs with Wealthwise that we're going to be filming our next show. It's going to be going out next week. We're going to try to put these out very timely. So James and I are working on right now trying to get, these shows, instead of waiting a couple days, trying to get them out. That's going to mean some juggling as far as the schedules. I know you guys will find as you guys have all clicked the little bell, so you're getting those notifications. You're also following us. Like Eva was saying, we are on Instagram, we are on TikTok, we are on all those social medias, and we're trying to grow those presence because we are YouTube heavy. Our content is very YouTube heavy. It's not so much those things. But when you go to your way and you like and subscribe and you share our stuff, you share these social media things, you've got a beautiful young lady here that is explaining to you that she can replace her income with a couple hours of charting a day. Why aren't you doing it? Like, why aren't you taking an interest in this? So I love it. Eva, thank you so much for joining me, sharing your insights, sharing your passions. It was a pleasure having you.
Thanks for having me.
Absolutely. And from me, folks, as always, let's make some money together.